Thank you very much for that warm introduction. And I want to say hi to everyone here. I know this is the first talk after the launch, but we will get it going. I hope you get very engaged with this topic that, for me, I'm very passionate about. So my name is Mauricio. As you were saying, I'm head of data science at Cheddar Payments. That's a startup. We're in the financial services sector in London. We do help people manage their money and give them rewards, like cashback. Today, I will be talking about open banking. And in particular, I want to show how it can be useful for you to get a loan, how it can be useful for your shop to understand better your customers, and it could even be used for market research. So first, I would like to tell you a little bit about myself. I know some of you are new in data science, are starting a career in data science, so I will tell you a little bit like how was my career path. So I did a PhD in computer science. In particular, I focus on multi-agent systems. Those are systems in which you have different parts that work together. And in the case of music, so we had the musicians and the computers playing music as a team. Then I moved to a postdoc. That's a job that usually you do after PhD, but before becoming a professor. And I continue on the study of these systems, multi-agent systems, but I focus more about nature. So how animals survive, eat, and prey together in a kind of simulated world. After that, I became a professor of data science. I went back to Colombia. I'm originally from Colombia. I was teaching algorithms. So that's like recipes to teach a computer to do things. But at the same time, I got involved into helping farmers and insurance companies to solve problems in data science, how to improve agriculture, and how to improve healthcare. But after a while, I got tired because academia, for me, it was too slow-paced. So I moved to a more fast-paced environment. So I moved to this company called Mercado. It's kind of like the Amazon of Latin America, the biggest e-commerce. And I was the manager of a data science team supporting the loans business. So what we were doing there was to help them predict who will get a loan or not, and also check that the credit collection was managed well. Then something unexpected happened. I fell in love. I got married, and my wife got a job in the UK. So we moved over to the UK, and I got this job now at Cheddar as head of data science and AI. And in Cheddar, we started as a payments company, so we do peer-to-peer payments, those with the QR codes. But we also do rewards, so we get people cashback when they buy at certain retailers. And recently, we are creating something we call the debit score, that is like a credit score, but instead of credit information, we use your debit account information, so with open banking. And that's how I got so many ideas, but not only for underwriting, but so many things that I want to share today that could be useful also for retailers and for many more businesses, not only fintech. So I will tell you a little bit what we'll be covering today. So first, what is open banking about? What is it? What is its purpose? How it can be useful? Then some applications to help you get a loan. Then some ideas for your shop to know your customers better. And finally, how can we use this technology for market research? So the first, let's discuss open banking. So what is it about? And it's not so scary as it sounds. You will see. What it was created, what's its purpose. We will talk about the benefits for financial services technology companies, and also for retailers, for shops. So for your shop, how this could be useful. And I imagine most of you don't work in financial services, so I wanted to bring also ideas for other kind of companies. And finally, who is providing these open banking services? You could hire, they could help you out. Um, so open banking basically provides, allows third parties to access bank data from banks through secure APIs from consumers. So it's like giving somebody the keys of your house, but only if you trust this person and if you know it, if you know this person. Before that, you will have to, before the invention of open banking, let's say, for example, I'm going to give you a loan. So you will have to go to your bank and tell them, please print my bank statements of the last 6 months. And then you will bring these bank statements in sheets of paper to a lender, and the lender will check them and will see, how is your spending, and decide if it's your loan. Now, it's just one click. You authorize the lender to see your bank statements for the certain period of time, and you consent. It has to be consensual. And then it's much easier. But not only to a lender, you could also, if you want, you could, as a consumer, you could give access to a retailer like Tesco, Sainsbury. I want Sainsbury to see where I'm spending my groceries, or not only at each shop, but at the competitors. If it's something you want as a consumer, you could do it. You could do that with just one click. So, well, what are the benefits for us, for consumers? So it could help you better know where are you spending your money, how much you're spending on eating out, on groceries, on traveling, based on your payments with your bank. It could help you get a better loan. Why? Because you could share information about your personal finances to a lender. For example, that you are not doing gambling, that you are not doing buy now pay later, that you are paying back your loans, that you're paying your mortgage on time. You could, and this will give you a better access to a loan, a better rate, maybe. You can do faster payments, so you don't need all the usual steps. With open banking, it's much easier to make a fund transfer. You can also, for example, say, I want a fund transfer to happen every now and then. You could do like many things without having to do it manually every time. And it could even give you better credit scores. So if you want, as a consumer, maybe you could share your bank account information to a credit score agency like Equifax, TransUnion, and then they could use this information from your bank account to maybe say, this person has a credit score of 500, but according to this spending, it should be 600, it should be higher. Because they have information about, for example, you are saving money. Usually credit score agencies don't know about your savings account, so this is something you could share if you want with a credit score agency too. So let's see the benefits for fintechs. So they could offer personalized loans. So they could check, this person is saving money in his savings account every month, and is not gambling. So I will give it a better interest rate on my loan. They could also, insurance could give you a personalized insurance. So imagine, for example, you have a lot of interest, a lot of transactions on healthcare. So the insurance company will, I'm going to give you a special premium because you are very interested on healthcare or something very specific for you. Also savings. So a fintech could help you out save money, for example, by comparing how much you spend on utilities compared to your neighbors, compared to others in your neighborhood, and will say, you're spending too much on electricity, maybe you want to change retailer, and this could all be done automatically, of course, if you consent the access to your bank information to a third party. And it could also be useful for fintechs to create budgeting tools, so they could help you manage your money better and stay on track on how you spend your money. And now let's think about the benefits for your shop. Imagine you have a business, you're a retailer. So, for example, your shop could track your customers' spending. So how much they're spending at your shop, but also at other shops. And these shops maybe are your competitors. So that's interesting. So if the consumer consents, You could see how much they spend on your shop, but also at other shops, and if they pay by credit card or not, and if they buy online or inside. This could be used also for target marketing. So by knowing how people spend, you could target them with offers that are more relevant for them. Also, your shop could do personalized offers. This is related. And even could do a loyalty program. So you don't need those, you won't be needing in the future those punch cards anymore. Because in your bank statements, you can already check how many times you have been in the shop. Because you make payments with your card, so it's not needed a punch card anymore. If they can access your bank statements, they know how many times, how often, how much you're spending at the shop, and that could be used for a loyalty program. Could be like a new idea, a new technology for loyalty programs in the future. So who are the providers? There are many providers. So we have TrueLayer. I think that's one of the most popular ones. There is Bat Financial, MoneyHub, Cheddar also provides some services. Well, I don't work on sales. I don't really know the difference or how much they are, but I can tell you that it's different. Some of them, for example, will give you just the bank transactions. Others will give you the bank transaction, but I will tell you what they are. For example, this is a rental payment, this is mortgage, this is a tax payment, this is an insurance claim. So they could tag these transactions, not only give you the raw transactions, but tag it. So you can really find it will be more useful. And others, we won't give you the individual transactions, but instead some aggregates, like, oh, this person spends 300 on groceries, 400 on rent, and 600 on loan repayment every month. And this is the average, or just will give you how much they're spending in the last 6 months, but just the aggregates. So then some companies will provide you with that. And maybe that's enough. Maybe you don't want to check to all the transactions. You just want to know if they're paying them rent on time, how much. For example, if you're a rental agency, that's enough. And you don't want to design an algorithm to know if something is rent or not. So maybe they can just tell you, this is how much they're paying on rent, and you don't need to know anything else. Like, you don't need to worry about the details. So that's a bit the difference between all these providers. You need a provider. This is very important because accessing a person's bank account requires you to be regulated by the Financial Conduct Authority. So if you sell, for example, groceries, it will be very difficult that the Financial Conduct Authority says, you really should be checking your customer's bank account. So they won't give you a license for that usually. But you can have a third party that helps you out in getting these bank transactions. Of course, there will be also some negotiation why you need these transactions. Your customer has to consent. If the customer knows that it will have to reconsent every month, that it still wants to keep sharing these transactions, or any time the person can say, I don't want to share anymore, and you will have to delete all the information. But there is regulations about this. That's why usually fintechs are only fintechs and banks are allowed to use this to access people's bank accounts. We're back. So open banking is so it's a system that allows you to share bank data. Imagine like a phone, like a secure line, in which you can safely share information from your bank accounts with a third party. This is very useful for financial services, for example, for lending, but it could also be useful for your shop to personalize offers, and it could help also retailers to know how much people is spending at their shop or competitors. So now we're going to discuss a little bit about underwriting, about how this can help you get a loan. So it could help, for example, imagine you are you want to get a loan, so you could share you could share your name and your address. That would be a way to verify your name and your address, so the lender can know what is your name and your address using the information from your bank account. So verify personal information. But also the lender could check information about you, financial information, like how much you're paying on mortgage, you're paying on time, if you're paying back a loan, how much you're paying, if you had insurance claims, these kind of things. This all be reported in your bank accounts. We could also do machine learning. So we could predict things. For example, if a person is going to be run out of money, so it's going to be in overdraft in the future based on the current spend or the past spending. And we could also use this technology. For example, imagine you could have a chat that can give support to people about their personal finances, and the chat will have access to the bank transactions of the last months, and then based on that, could give you some advice. So let's think about this information. We could verify. So rent, how much you pay, when you pay on time, you always pay the same amount or not. Salary, how long have you been employed, or you change employees, because in the title usually of the transaction you will see the name of the employee, so you could know the employer. You could know that the person has how long have been in the same job, how much is the salary. Is it a salary that comes every month or every 15 days, or sometimes some months it doesn't get paid? Like all this can be verified. State benefits, for example, if you have pension or you have support payments. This is actually something very interesting because there are companies, for example, like Amazon or like very big retailers who they will say, I will give you for free Prime if you are on benefits. So it doesn't have to be something bad. No? It's something you actually could get a good deal if you are on benefits, but you will need to verify them to how you prove to Amazon that you have benefits. And they will say, because you're on benefits, I will give you Prime for free. So this could be one way through open banking. Pay back loans. This is something you could also report, how much you pay back on loans, if you pay back on time. And utilities, like how much you pay on electricity, water, also if you pay on time. So now imagine you are the first person, this first consumer. So your rent is $1,500 a month. You pay on time or not. Or the second person, now you're the second person, so you pay $500 of utilities. This is something it could be interesting to share to a lender. It means you manage well your household spending. Or paying back a loan. You're paying $300 back a loan every month. They said every month, how long have you been paying this? And maybe they could even estimate your APR based on how much you are paying and when you got the money from the loan. Or rent, $1,200 a month. Oh, that's good. Are you paying on time or not? So now let's think about machine learning. That is a topic that is very, very interesting for us as data scientists. What can we predict with this information? So imagine we teach a machine learning algorithm the past 6 months of transactions of many customers. So it learns about these patterns, how they're spending, what are they spending, how much, how frequently. Then we show it if the person in the next 6 months is going to have an overdraft. But let's say if it's going to be in overdraft for 21 days. It could be like a signal. 1 day is OK, 21. It's still not a default. It's a loan, but it's a loan that usually with a very high APR, you wouldn't get into an overdraft if you don't have a problem. So that could be like a sign of alarm. So then the algorithm could learn to predict, based on this spending in the last 6 months, if a consumer, a user, is going to get, if we're going to be in overdraft in the next 6 months. So then let's say then we give it a new client. It will check the last 6 months of his spending, and it will predict, is it going to be in overdraft or not? Hopefully not. So now let's think about the chat. So that's another application. So imagine you could talk to an AI chatbot and say something like, how can I manage my money to get approved for a loan? And it could say something like, you could start by allocating 10% of your income in savings accounts, something like that. And then you say, what else can I do? I recommend not gambling more than 10% of your income, something like that. But of course, in this case, you will be willing to, you will need to understand that you will be sharing to this chatbot AI your transactions of the last month, so you can run some queries and then do this kind of recommendations, personalized to you. So it could be useful for helping people get a loan, maybe get a better rate with information from open banking. It could guide consumers to a chatbot. It could help companies verify financial information. Maybe not only lenders. Imagine, for example, a rental agency that also wants to see if you are, what is your income, what is your salary, if your salary is every month, or if you are a freelancer, or if you are paying rent on time. That's maybe something that a rental agency could also verify through open banking. We could also use it for predictions. Imagine just if we want to predict that a person is going to run out of money. That could be something we could predict. So now let's think about your shop. That's the most interesting part, because I think this is of interest for many, many different businesses, not only fintech. So imagine, for example, that you create some sort of vouchers for your consumers. So like those kind of vouchers that they give you cashback. So like, so people could pay with these vouchers. So you know how much they are paying with these vouchers because you created the vouchers. But it will be very interesting if your shop could know also how much they are spending with their bank card. Usually you don't have that information. So if you see your clients are buying more and more with the vouchers, okay, that's good. But maybe they are buying less with the bank cards. So if you could see both things, you could see the full picture, and you could see if overall bank cards and vouchers, if they're buying more, so then it was worth to have these vouchers and give them cashback or not. And also another thing is like you could see how much they spend with you, that probably you know already, but how much they're spending at other shops like your competitors, because everything is in their bank cards, in their bank statements. So that could be also very interesting, very useful, I think. So now let's imagine this case. Imagine these are purchases with bank cards from your customers. And these are purchases that they made through vouchers, those vouchers that give them cashback. So now let's imagine in the bottom, we have the month of purchase. So we imagine there is a January, February, March, April. And then on the side, we are going to have how much your customers spend on average every month. So now, in purple, we are going to see how much they spend, not with your vouchers, but with their bank cards. That's information we can get from open banking. So how much, in average, every month your customers are buying at your shop, but with bank cards. And then we can put on top of that how much they are buying with vouchers. So now we have the full picture. Of course, there was a decrease in the spending on bank cards, or maybe the increase was not so high, but altogether, you can see the full picture. But imagine this is the most revealing moment of this talk. You could also think about how much they were spending last year in the same month. Just for an idea, are they spending more altogether now than they did last year only with bank cards? And you could do this because usually when you share information through open banking, you share the last 2 years of bank transactions by default. This can be changed, but that's by default. You get 2 years, so it's a lot of history. That's why we can use it to train machine learning algorithms or forecasts with that information. And in this case, I will say to this retailer, it's not working. I don't think so. Like altogether, but look at, maybe this was summer, and it wasn't so much of an increase compared to last year. Maybe it's not so good, this strategy. Well, but it's something, everything, but if they only had the blue part, will be very limited. And give me this voucher. Yes, people is buying from, but is it more than the last year? Is it, how much are they spending with the bank cards? I mean, this give us the full picture. So now let's think about another case. So on the bottom, we have the total monthly spend. So all the spending of all your customers. And on the side, we have the retailers. So we're going to have not only your retailer, your shop, but you're going to have different shops. So these red bars will mean how much your customers spend at this retailer, the total they spend in a month, like the average monthly spend or how much they spend on the last month. So the bigger, the better. So you could think about this as a cake, as a pie. and you will like to see how big is your slice that you are getting compared to the slice that the competitors are getting. We usually call that a share of wallet. So you could imagine now that your retailer is the one inside the purple square. So we could compare it before and after a campaign. So after you run a campaign, you could see, for example, if your customers start shopping more at your shop and less at the competitors, and which competitors were more affected by your campaign. It's an information that usually is very difficult to have as a shop. But all this is very easily if you have information of bank statements. Unless it's a cash business or something, but if people is paying by card or even by fund transfer, everything will be in the card statements. So open banking can help your shop to compare spending with an offer versus the spending with bank cards. It could also help you reveal how loyal are your customers, if they are buying at you, at your competitors. So now, imagine with open banking, we could even do market research. This is something like very unexpected. So let's think about it. Imagine, for example, we could use open banking to directly estimate information about your customers of your shop, like their age, their gender, location, income, annual income. And also, we could use machine learning to predict these demographics like age, gender, in the case in which we don't have the direct information. Because sometimes you don't have the direct information, so you could use the spending patterns to predict in those cases. We're going to see an example of this. And then, once you have these demographics, this can be used to target your customers with offers, with personalized offers based on the demographics that you want to see. So let's think about an example for that. So imagine for market research, so we're going to estimate gender, and we're going to do it directly accessing information from open banking. And then for the cases in which we cannot access directly, we are going to predict with machine learning. So let's start with the first case. This is we're going to access directly the information of your customers' bank information to estimate their gender. So one idea could be we could use the bank account legal name of the customer to estimate the gender. So imagine you have a person that says Mr. Mauricio Toro. So then, this is a male, you could say. Miss Andrea Serna, and could say, oh, this is female. But how can we tell? Because of the title. Usually Mr. means man, and Miss means woman. So the title in the bank account name can give us a hint about the gender. Of course, we could also check the name, but that's a complicated thing. No? Already you can see Andrea could be a name of a man in Italy, could be a woman in Spain, well, could be. It's not so simple, but the title is more straightforward. But not all the banks have the title, because title is more like it's like old school, like Lloyd's, you know, like Halifax, these kind of banks. They will have the title, but a modern bank like Starling, Monzo, Revolut, they don't even ask you for the title, like Doctor, Lord, no, they just say your name. They don't have that information, and they don't report it in open banking. Maybe they don't even have it inside their systems. So they think differently, and they just don't report the title. So, let's think what we can do for those users when we don't have the title. So imagine we teach a machine learning algorithm to look at the last 6 months of transactions of your customers. And again, look at these patterns. What are they? How much they are spending on fashion? Fashion could be interesting, you know, if we want to maybe the women and men approach fashion in a different way. How much they are spending on luxury, on pubs, on gambling, different things. And then we show the machine learning algorithm the gender of these users. So the algorithm will learn to predict. So then in the future, when we have a customer, we say, these are the last 6 months of transactions of this customer, and the machine learning algorithm will be able to predict the gender based on their spending. So let's think about this case. So we have Dr. George Isaacs. Because he's doctor, we don't know the gender. So we cannot really directly estimate what is the gender of this person. So sometimes we don't have the title because modern banks don't use that. But other times they have the title, but it's doctor, and so we don't know the gender from that. So what we could do is we could look at the spending of Dr. George Isaacs of the last 6 months. And imagine that this person is spending a lot on gambling and pubs. So the algorithm will say, okay, it's a male. But of course, as you can imagine, this is a risky thing, and you will have to be very responsible about this prediction because we don't want to make assumptions about a person that could hurt their feelings. So we will have to, if this is even something we should even predict, and if we predict it, should we call this person Mr. just because of the prediction? I mean, there is a lot to think, but it's true that there will be patterns on the spending that we could use to predict the gender. But it will carry a lot of bias and a lot of things maybe we don't want to do. But we can also do a very similar approach, imagine, for age, for location, for the job that this person has, if this person has children or not. I mean, if you can imagine, there is a lot of things you could predict based on the transactions of a person and if you have the label to train. So with open banking, we could help your shop to know your customers better, like the age, their gender, the location. And we can also use the spending patterns to predict these kind of things. So another one, like how will you, not predict, but how you estimate the location of a person? Like how will you know where a person lives? That's also like how can we tell? So of course, it would be very nice if all the bank transactions will have an address, but usually not all. Not all the banks report the address. Not all the payment providers report the address of the transaction. Not always the address is correct. Sometimes it says London because the company is based in London, but you shop in Manchester. Sometimes it says London because you purchase online, but you purchase in a different city, but it doesn't say. So maybe that's not so reliable. So one thing you could do is, for example, some of the bank transactions I noticed the other day, they say the store number. So for example, it says Tesco store 4150, or it says Co-op stores 5153. So then that could be very interesting because you can check, 4150, that's a shop that is in Bath, in the city center. So you could know that this person shop in a specific location because of the store number. And you could see what is the most frequent store, like Tesco store or Co-op store, where this person is shopping. That could be an estimation of location, for example. Without the need of machine learning, then we could train an algorithm to predict if needed, but this would be like a direct estimation from the open banking data. So you have to be creative, but there is a lot of information in bank transactions. So that is quite interesting. Age, maybe it's a difficult one. Maybe you will have to ask your customers, but once you have age, you could predict it for those that you don't know. That could be possible using the spending patterns. But to get the labels, maybe it's something you will need to ask. It's too hard to extract from the bank transaction. But income is easy, right? So let's think about what is the take home of all this. So with open banking may help you to get better chances to get a loan or get better rates. You could also predict if you are going to run out of money. It could also be useful to give these bank transactions to a chatbot to give you advice or to give you some insights about how you're spending your money or how you should spend your money. Can imagine that has to be regulated, right? It could be dangerous if we have a chatbot telling you how to invest money or what to do. Depends how you frame it. Not like, this is just an insight, but that's something the Financial Conduct Authority is thinking a lot. But I mean, it's possible. To give the bank transactions to the chatbot is good, but well, you You could compare, the spending with bank cards and vouchers, and estimate demographics. So now, the next steps. Just identify a case in which you think open banking is useful. Choose a provider that helps you access this open banking data, and enjoy the information. So if you have any questions after the talk, this is my contact in Medium, or X, or LinkedIn. Thank you very much. And
great, thank you so much, Mauricio. Do we have any questions? Got about 5 minutes, so yeah, put your hand up.
Hi, can I use a provider for my personal use case, like me accessing my own bank data?
No, I don't know. It's a good question. I know, for example, some banks have, all the banks have open banking. I know, for example, in Monzo, there is an option, no, not Monzo, but there are some apps, I think maybe Emma, that is like a personal finance manager, or Snoop, that you can export your own bank transactions into an Excel file. So you don't really need to hire, but I mean, there are some apps that are already focused on consumer that can help you take all your bank transactions and extract, just export it into an Excel file. That could be possible, yes.
Yep.
Thank you for the talk, very useful. How do you deal with joint accounts, for example, or a credit card that is used by, by couple for their transactions, and there's no gender or age?
That's very difficult. Those are the corner cases that makes all the analysis different and difficult. In general, you will get information from the bank. It will say this is a joint account, 2 parties. You will get the names of both parties. In some banks, you also will get the titles. But then it's difficult. For example, that's like a challenge. For example, if you're going to use this joint account and you want to get a loan, but it's joint, I mean, they will have to be treated differently. I mean, open banking is solved the problem, but it's more about how we take decisions when the account is shared. We even have that problem for cashback, because like if there is a couple, they have a joint account, they want cashback, and one of the person links the bank account, but then the other one cannot link it, because we can only have one person. We're gonna have an account with 2 different users. So then it's a challenge.
Okay. Any more questions?
Thanks for the talks. So for open banking, to have that degree of granularity of data is definitely very useful for businesses. Just curious, what kind of criteria are to allow a business to request these kind of data? Do I need to have interaction with a client, and that is enough? I can request the data to do analysis. I can give any incentive from a client so that they could give me is it something that is regulated or?
Yes. Both, because, for example, you will use a third party that will already have all the technology of open banking and getting all the transactions from any bank. And let's say you're a retailer and you want to use this. This is protected by the consumer duty. So everything you do, it has to be transparent. So there is a regulation. It has to be transparent. The consumer needs to know all the time what is happening. Like, I'm sharing my bank transactions through Layer, but I'm sharing to a rental agency for only 6 months, 1 year, and how long, and for example, for how many days it will keep sending my transactions to this person, and the user needs to be able to stop at any time, and they will need to reconsent if they want to keep sharing their information or not, and they need to be told what is it, why are you sharing this information, and you need to tell the consumer, we are only going to only share how much you pay on rent and not anything else. Oh, we are going to share all the bank transactions, or like everything has to be transparent. And that's why the companies that provide the services has to be regulated by the Financial Conduct Authority. But the retailer doesn't have to be a financial company, but then it will have to agree with all these compliance things.
Okay, brilliant. Can we get another round of applause for Mauricio?
Thank you.